As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Welcome to Stocksnipertrading. In today's tutorial, we will be going over the Doji Candlestick. A Doji Candlestick forms when a security's open and close are virtually equal for the given time period and generally signals a reversal pattern for technical analysts. In Japanese, doji means a mistake, referring to the rarity of having the open and close price exactly the same. In this example, we can see where we open and price action makes a low where sellers push it down. However, buyers push it up to the high, and then sellers push it back down to where we close right by the open. So it's virtually equal. It's a very low volume candle. It's got little to no body and small upper or lower wicks. And this suggests that it is very neutral in nature, and we can see in areas, it could be a pause in a continuation pattern where price action is just cooling off before it continues its next momentum, continue, or a reversal. We need to take a look at the context that doji candles are formed. A doji candlestick is seen as an indecision candle. It is a neutral candlestick. The open and close are virtually equal. It looks like a cross or a plus sign. It's found in areas of consolidation. And the doji family consists of a Gravestone doji, a Dragonfly doji, and long-legged dojis that we will discuss in other tutorials. A doji is a name for a session in which a candlestick for a security has an open and close that are virtually equal and are often components in patterns. Doji candlesticks look like a cross, an inverted cross, or a plus sign. Alone, dojis are neutral patterns that are also featured in a number of important candlestick patterns. On the left, on the diagram, we can see that we have a little bit of a bearish downtrend. We can see some bearish candles making lower lows and lower highs. And eventually we do reach a level of support where we do get some buying momentum. And we have some small bullish candles form. And we also have a doji. This could signal that price action is just cooling off and will continue the bearish downtrend as we get more sellers entering the market after this pause. And we can see in this example that we do get a big bearish candle that completely takes out our previous support and continues to make lower lows and lower highs. And it was all signaled by a cool off candle where the doji candle was forming. This is another example of a doji candlestick pattern from our TradingView charts. And this example is the GBP USD pair. And these are 5-minute candlesticks. And we can see that we are in an area of consolidation. We can see that our price action is in between 1.36891 and 1.36844, where each candlestick represents 5 minutes. And you can see that it is in an area of consolidation trading sideways. We have our support level where we have buyers coming into the market. B, we have our resistance level where sellers are coming into the market. And C, we have 2 doji candlesticks which represent indecision where the open and close are virtually equal. And the price bounces around after these doji candlesticks are just in a cool off period. And we have a lot of consolidation period and price action D. And finally, at the end of this, we do start to see where the sellers take the momentum and then we break through the previous support level and we do continue to the downside. But these doji candlesticks are just created in an area of consolidation. They are not of any real significance in this particular example because it's just illustrating very low volume. Price action is just bouncing around, and we do have a lot of indecision between the buyers and sellers. In our other example, we could see that when doji candlesticks are formed in where we have a clear uptrend or downtrend, they could be seen as a pause in momentum where we get an increase in the momentum, and they could be a continuation candlestick. So doji candlesticks should be looked at and analyzed at the context that they're formed in. So this is the example we're showing of just trading sideways in an area of consolidation. So this is not an area that you would want to trade because we do see a lot of doji candlesticks. That's indecision in the market, and price action is just trading sideways. And we can see another doji candlestick that's formed. It's low volume. The open and close are virtually equal. So what we're looking for is more of a pattern to break through this area of consolidation to look for a buy or sell entry. A quick recap. The doji candlestick pattern. It is seen as an indecision candle it is seen as a neutral candlestick where the open and close are virtually equal. It looks like a cross or a plus sign. These candlesticks are usually found in areas of consolidation. However, we do find them in an uptrend or a downtrend, and they are seen as a pause in momentum where we could get another continuation on that pattern. And the doji family consists of a gravestone doji, a dragonfly doji, and a long-legged doji that we will discuss further. We hope you enjoyed this tutorial on the doji candlestick. And on our next tutorial, we will introduce the dragonfly doji.